Hi everyone, welcome back to Crypto Talk. Today I'm talking about the European Central Bank and their meeting last week where they announced further rate cuts as well as introduced their new quantitative easing program, which is going to be printing 20 billion euro on a monthly basis, and that's starting from this November. So huge news coming out of that ECB meeting, and now all eyes are on the Fed, who are meeting on Wednesday, and that's to announce whether they're going to be reducing rates as well, which they're pretty much expected to be doing. There's a lot of pressure on the Fed at the moment because they've got that, the problem of the increasing dollar against the euro, so they need to be able to keep that equilibrium and not let the dollar get too strong. So they are in a bit of a tight spot here and really are expected to be reducing rates. So huge news for the crypto space. I'm really excited to see what's going to happen to prices this week, particularly the price of Bitcoin. After the meeting in, I think it was June, where the Fed reduced rates for the first time in 11 years, the price of Bitcoin between the June and July meetings shot up 22%. So if we have a repeat this month, I'm certainly going to be looking forward to any kind of 20 to 30% gain in the price of Bitcoin over the next month. So really, really exciting just watching the crypto prices this week. I know I'm going to be waiting for that announcement and checking prices as soon as the meeting is over. So yeah, huge news for the space. It's really seen as rocket fuel for crypto and Bitcoin when there's any kind of rate cut or, monetary policy where, a stimulus package such as the one that the ECB have just announced is going to have a big impact on all markets. So one thing I did want to point out was anybody who is holding any of their wealth in euros, I definitely think this is a cause for concern. I know if I had any of my portfolio in euros, I'd be wanting to get it out at the moment, just because you are going to be facing with a devaluing currency on a monthly basis. So the banks really do have so much control over the value of your assets and your portfolio. And I know that I'd want to be getting all of that away from euro into an asset class like cryptocurrency that is not controlled by central banks. It's completely decentralized. And any of the coins, Bitcoin, any of the major cryptos generally have a deflationary nature where they have a limited supply. They can't just go and create more Bitcoin. So it's a really great way to know that the long-term growth of Bitcoin is definitely going to grow. And if it's anything like the last decade, that is at an astronomical rate. It is the best performing asset class of the last decade. And I believe it will continue to be so over the next decade and, in the years to come. So not only would I be concerned with my currency if I was holding euro being devalued, but there's also, the issue with all these rate cuts and the economic slowdown. It's just any kind of traditional investment, stocks or bonds, is becoming less and less of an appealing investment option for people because the yields are just so low. It's it's no wonder, the stock market is really slowing down and people are looking for alternative investments that have a higher yield. So yeah, it's great news on both accounts. And then obviously we've got, the price of lending is also being reduced. So anybody who's actually wanting to leverage and borrow for investments that have a high yield, it's also a very, very attractive time to be borrowing right now. So yeah, like I said in last week's video, when I was talking about Brexit, or that was actually a couple of weeks ago now, just crypto being seen as that safe haven. It can be in so many instances, and when you've got this kind of economic instability, it really, really is an attractive place to be able to park some of your money, if not all of your money. It depends on, on how gung-ho you want to go. But anyway, that is the latest video. I hope you enjoyed, and I will talk to you soon.